Hello, everybody. Today we are going to be discussing financial statements of companies. Usually, financial statements are released by only public companies, and then private companies can release financials to certain people, usually if they sign non disclosure agreements. But getting right into it, financial statements are going to be documents that portray a company's financial performance and business activities. So there are going to be four different types of financial statements: balance sheet, income statement, statement of cash flows, and statement of retained earnings. For this video, I'm not going to go over the statement of retained earnings. A lot of people really don't look at the statement of retained earnings. But basically, what it is, it's just beginning retained earnings and then all the changes throughout a period of time. And then it'll also show ending retained earnings. But for this video, we will not go over that. But getting right into the balance sheet, it's going to show assets, liabilities, and stockholders' equity. The basic accounting equation is going to be assets equals liabilities plus stockholders' equity. So on the balance sheet, assets will always equal liabilities plus stockholders' equity. If they don't, then the company did something wrong, but it's always going to equal that for public companies because they do get audited. So assets are going to be the top of the balance sheet. It's going to break down every asset account as well as the amount at a specific point in time. And then it'll show total assets on there. Liabilities is going to be under the assets. It's going to break down every liability account, long-term, short-term, and then it'll show total liabilities. And then stockholders' equity is going to be at the bottom of the balance sheet. That's just going to show some stuff like common stock, dividends paid, dividends received. And then it's going to also show total stockholders' equity at the bottom. And the whole balance sheet is going to be for a specific point in time because that's how many assets and liabilities and stockholders' equity a company would have at a specific point in time, unlike the other financial statements, which are going to be over a period of time rather than a point in time. The two reports that public companies will be releasing are going to be the 10K and the 10Q. Those are the two main reports. 10K is an annual report released once a year for a company's fiscal year. 10Q is going to be a quarterly report that is released 4 times a year. So going over to the income statement now. Income statement is going to show revenues and expenses, and at the bottom it'll show net income. The revenue will be at the top, and then the breakdown of revenue to get total revenue. Then the expenses will be below that. It shows every breakdown of the expense accounts. Then at the bottom, after you subtract expenses from the revenue, and sales is also called revenue, then you'll get the net income. And this is going to be over a time period. So for example, let's say the company released their 10Q. So that's going to be for 3 months. So one of the quarters of the year for 3 months. So for those 3 months, the company is going to do a certain amount in revenue, a certain amount of that is going to be expensed, and then you subtract those two to get the net income for that specific time period. Same thing for the 10K, it's just going to be over a specific year, all the revenues, all the expenses from that year, and then you're going to see the net income of the year. Moving on to the last financial statement, that's going to be statement of cash flows. This is going to show the cash inflows and the cash outflows, again, for a specific period of time. The statement of cash flows is broken down into 3 separate categories. It's going to be operating activities, investing activities, and financing activities. So basically just a brief overview of each. Operating activities is going to be the short-term activities that the company was doing with their cash. So that's going to be kind of income statement related. So the revenues, expenses, that kind of stuff is going to go into the operating activities. Investing activities is primarily going to be the long-term investments that the company makes. So whether that's buying long-term assets, selling long-term assets, stuff like that, that's going to go on the investing activities. And under the financing activities, that's going to be stuff specifically for the stockholders' equity report. So that's going to be the common stock, that's going to be the dividends paid, dividends received. That kind of stuff is all going to fall under financing activities. So yeah, those are the main financial statements. Again, there are 4 of them, but we only really discussed 3 here. 3 important ones being the balance sheet, income statement, statement of cash flows. If you have any questions, leave them below. Thank you.